What are the implications of Apple's tax avoidance in Australia? There are numerous ways multinational corporations avoid tax. However, the predominant method is known as transfer pricing. According to the Organisation for Economic Cooperation and Development, or OECD, the transfer price is a price adopted for bookkeeping purposes, which is used to value transactions between affiliated enterprises integrated under the same management at artificially high or low levels in order to effect an unspecified income payment or capital transfer between those enterprises. To put it simply, corporations are shifting profits from one country with high corporate tax rates through subsidiaries to countries with low corporate tax rates in order to avoid paying higher tax. There have been inquiries in the US, the UK, and now Australia into multinational corporations' tax avoidance. The actions of many multinational corporations were largely invisible to the public eye prior to these inquiries. They also provide the only in-depth information on some of the aggressive tax avoiding corporations in the world, such as Apple Incorporated, who is known as the largest tax avoider in recorded American history. As in 2013 alone, Apple Incorporated was reported to have $120 billion in offshore untaxed foreign earnings. Apple's main method of tax avoidance is transfer pricing. As mentioned previously, they do this through the use of subsidiaries, which are companies controlled by a holding company, generally located in an offshore jurisdiction. Apple has a number of subsidiaries or subs. One is based in Ireland, which owns Apple Australia. Apple Australia purchases, for example, an iPad from a subsidiary in Ireland called Apple Sales International for $550 Australian and sells it in Australia for $600 Australian. Hence, the vast majority of the profit is being recorded in Ireland, which has a lower taxation rate, but it doesn't stop there. The sub in Ireland is itself a subsidiary of the Netherlands-based Dutch Apple headquarters, which is in itself a subsidiary to the US Apple. The revenue earned from Australia and non-US countries is then paid to the Dutch sub in the form of royalties and fees for the use of an Apple license. Then the Dutch sub transfers the profits to another Irish sub called Apple Operations International, as transfers within the European Union are tax-free. That sub then transfers the profits to the tax-free haven in the Bahamas. This method is known in business circles as the double Irish-Dutch sandwich. Multinational corporations argue that it's just common sense and tax is a cost of doing business, so naturally a manager will try to manage this cost and the risks associated with it. And according to Google chairman Eric Schmidt, corporate tax avoidance is capitalism. Since the GFC and its associated austerity measures, which have been enacted around the world, governments and civil society have become more aware of the implications of multinational corporations not paying tax. Because if companies avoid paying tax, then the government may not have enough money to fulfill its social obligations, and the non-payment of corporate tax shifts the tax burden to other less mobile and often less well-off taxpayers. This makes people feel as though there is a social inequality and undermines public confidence in the tax law. Professor Jason Sharman from the Centre for Governance and Public Policy at Griffith University has suggested a lot of the corporate tax loopholes that multinational corporations use to avoid tax have not happened by accident and were deliberately created by governments or corporations due to lobbying activity and overall corporate compliance ethos. Due to this, the Australian public has little faith in that our government will fully rectify the tax avoidance issue. After the G20 summit in London in 2009, when tax avoidance was high on the agenda, the OECD was asked to collate an action plan that would form a guide for governments in changing their corporate tax laws. As a result, the Australian government is now attempting to address the issue by recently holding an inquiry into tax avoidance of the three most prominent tech companies, Google, Microsoft, and Apple. The final report from this inquiry is due on November 30th of this year. However, some recommendations have been made, including that the Australian government work with governments of countries with significant marketing hub activity to improve the transparency of information regarding taxation, monetary flows and interrelated party dealings. The committee also recommends that the Australian government continue to take a leadership role in finalising and implementing the efforts of the OECD in addressing problems associated with base erosion and profit shifting. The corporate tax avoidance issue is evidence of the disconnect between today's globalised economy and the international tax system that we currently use, which is about 90 years old and was created by the League of Nations in the interwar period. This disconnect is especially evident as multinational corporations have vastly increased in size and power, which is now challenging state authority. In addition to the fact that there has been an increase in the value and occurrence of intangibles created by these corporations, which form the basis of the tax avoidance loopholes that Apple exploits.
created using Powtoon.